So we got that first one set up. And now I'm gonna walk through some of the trades that I was taking this week, just so
Hmm.
you can see what my thought process was and stuff like that.
Hold on.
So on Monday,
What's up, baby?
let me pull that one here too. So on Monday I had traded SPY calls. Go here.
1 second, bro. I'm sorry.
No, you good, you good. Setting up anyways.
My fault. My fault. Sorry about that.
You good, you good.
All right. So we say you took a couple spike calls this week.
Yes, sir. So this was the first trade that I took. Um, and there was a few key things that I was looking for. So firstly, the last time we had met, right, we always want to start on bigger time frames. We had saw this major low get swept, and then we seen this big candle form right here. And then
Hmm.
I think we seen a few of these form too, but this just kept going up and up and up. So, in the beginning of the week, I was like, okay, originally I think this is going to go down. And I was expecting it, to keep going up until we got kind of in about this gray area. But you can see it still went up and up and up, which is fine. Like, you don't need to be right to make money. You just need to be right about the time that you enter and exit.
Hmm.
So I dropped down to an hourly, and then Monday had came. And usually, so what I'll look for is I'll look for a very strong candle. So you see this candle right here on Friday that closed.
Ain't
So
this one
that,
called like an engulfing candle?
yeah, yeah. I don't focus too much on what it's called. I just focus, just what it looks like. Because
Yeah.
just seeing it, you'll understand, okay, that candle has a lot of orders placed inside of it. And so
Hmm.
in the future, there's potential for a lot of orders to be placed off of it again. And
Hmm.
so I saw this big green candle right here, and I had dropped down to a 15-minute chart, and then I was like, okay, cool. Once I had did that, I seen these candles right here. So you see how these candles are relatively strong
Yeah.
compared to these like baby candles right here.
Hmm.
Um, so that caused me to be interested in this upside move because it also took out this high right here. And if you
Right.
remember all those screenshots that we talked about, when we see a strong break past the high, we're essentially just looking for a price to come back down somewhere in between here. And then that's where we're looking to take that trade.
Hmm.
So that's why you see right here, I have break past the previous high. We see that move right there, and then it trades down. And this was actually a sweep of the previous low entry. I'll explain that in a little bit, but so I'm gonna delete this right now just to kind of show you there was 2 points where I had entered. So this green box once again kind of maps out your trade. So this black line is showing you where I would have entered that trade. So I entered it about here because in the morning, I had saw a gap up right here where this green candle is, and I thought it was going to come down and react to these candles right here and then start going up. But you see that didn't happen. So as it came back, and I was trading contracts that expired like 1 day away, 1 or 2 days away for this initial entry right here. And you can see this quick move right here really burn those contracts. And so
Hmm.
as price was coming down, I still acknowledged that this was still a pretty strong move. So I was looking for this low to get swept right here. And this is kind of that same thing that we talked about. Remember on that huge time frame, we seen this bigger load get taken out, and that caused this whole huge move. Well, it's
Hmm.
going to be the same exact thing on big and small time frames. And so
Right.
I was just understanding that okay, once that low gets swept, there's potential for a lot of orders to be placed, and you can see that big move right here. Now, this
Hmm.
mini trade right here, I had entered a high risk contract, so I entered a contract that expired the same day to kind of
Hmm.
hedge my position so that I wasn't significantly down from this move. Now, this is risky, but I was willing to take that risk just because it has swept this low right here. And this is probably the safest entry that I usually see is when you see a sweep of the low and then you see a move to the top side. So eventually price runs all the way up here. I had took profit on that 0 day till expiration contract. I took profit right there. And then as the regular trade started to go into profit, it came all the way back down and I had exited somewhere in here. I don't know the exact area, but I ended up being up only like $9.88 on this trade. But the only
Yeah.
reason that was not in a loss was because of this little scalp right here. But
Right.
ideally, what you would want to do is you would want to catch this trade below this low. As soon as price comes below here in the morning, you would want to take that, and then you want to have something that maybe targets, these highs right here, or you can target a little bit above it.
Hmm.
Um, and so what that looks like in real time is because you're not going to see all this other stuff. It's easy to see it in hindsight, but that's
Yeah.
why, once it came down right there, I was like, all right, I think price is going to go up off of those candles. It didn't go up. It just kept going down. So I'm just waiting, waiting. When it sweeps, as soon as it goes below this. So always remember this tip. You want to be buying as price is going down, not while price is going up, because that's when
Hmm.
price is cheaper. So right as this candle goes down, you're going to see that snap start to happen. You see that next green candle form, and then you see it just start to take off. And so with the stop loss, usually what I do is I put it because what I notice with an entry like this is there will always be some type of upside reaction. So I'll put my stop loss below where the lowest low is created. Or you can put it, below this low if you're feeling like a little bit antsy. So if price comes down here, you can get out if it keeps going lower and lower. But usually I'll put it right below that low that was formed, and then that snap happens. That would have been what an ideal trade looks like, but I had just entered a little bit too early on that first one. So that's a
Okay.
very, very, very easy way. And if you have, like $500, you put $100 into this trade. This zero DTE definitely would have been over 100% return, or maybe just about 100% return because this would have been a $3 move. And so you were talking about Delta earlier. Um, and the delta comes into play too when you're trading naked options because so we already know what this screen is, right? You only want to
Hmm.
focus on the buy button if you're trading naked options, and then you want to focus on calls and puts. You have the expiration, and then the share price, and we're looking at SPY calls. So if I go to, or they're probably not even going to show contracts that expired that day. But if I look at these deltas, so what the delta actually means is how much price is moving every single dollar, or how much the
Hmm.
options value is going up. So
Yep.
if I'm buying, let's say I bought a contract that was $4 outside of the money. So one, two, three, four. We're looking at this delta right here. This delta is 21 cents. So a move like this, $3, $4 move, you would have made $80 or something like that on that trade. And you see this contract was only worth like $42, I think. Uh yeah, $42. And so you can see how that delta will kick into play. And that's how you get those like higher percent returns. And you can even see that this is a contract that
Oh,
expires one day away.
right.
Uh, so that's a way to gauge it. And you can also gauge it too because this delta will tell you how much you're losing if price goes against you. So this, say this low gets swept and I enter my position. Well, if you look how much the downside is, that's almost a 50-cent move. So I'm only going to lose $10 versus if I see a very quick move and it's like a $3 to $4 move. And then that delta will increase rapidly with options that expire one day away or on the same day. And they increase by this gamma. So this gamma is it increases $8. This is how much the delta increases for every dollar that the stock rises. So not only are you making that base of $21 per dollar move, but you're making that additional eight. But a thing that you need to pay attention to is the theta is significantly higher. So when it goes against you, you're gonna get burned easily. So it's very important to make sure like that's why I do things like enter below these lows right here, because that's when I understand probably the strongest reaction and the quickest move is going to come off of those. So with smaller accounts, you're just looking for quick $1 to $2 moves, and that'll kind of be your bread and butter to grow that basis until you get to like 1,000. And then once you get to 1,000, then you start taking it to 3 days and out, and then you start buying your contracts based off of that because it's going to be a lot less risk. And it's up to you if you want to keep trading the same way or start changing your strategy. But that's a very simple way to get a nice, quick, easy return.
Hmm.
So trade two. and this was going to be a loss. I was looking at QQQ puts. Um, on this one, what I was thinking was, I was thinking that when news had came in, and I'm going to drop down to a 4 hour chart. So we already know that principle that I talk about where it's like you want to enter you want to enter a position when someone else gets taken out. So I always look what I like to do is when I see price coming up and it's a green candle, it's about to approach a green candle, I'll be kind of looking for a reaction in this candle and I'm missing one of my things. One second. Might be the arrow. Yep. All right. So, like I was saying, when I see price coming into a green candle, I'm always looking for some type of like downside reaction. And so as price like came up and approached this, I don't know if I can move this somehow. I'll do it like this. But as price came up and touched that, I was looking for a red reaction, but we see it never really comes down. And also, the big news that I was looking for that I always talk about, CPI, interest rate, and unemployment. Well,
Mm-hmm.
CPI had released this day. So I was planning on swinging this. So I was expecting CPI to send this down, but you see CPI did not send it down and just kept going higher and higher. And I took a big risk on this trade and I lost basically 100% of it. So I was down like $80, but I wasn't tripping because I knew I was adding money still, and that's easy to recover.
Mm-hmm.
But this just goes to show like even with the loss, you can still recover. You just have to
Yeah.
keep on trading those setups. Like you just have to keep going basically, and you just have to
Mm-hmm.
understand that whatever is gonna work works, and whatever doesn't work it doesn't work. And one thing that I got to stop doing too is swinging because I also swung these contracts and they expired, the next day. And so if I'm playing with fire, I'm gonna get burned. So that's completely my fault. Uh,
Is swing the same thing as rolling?
what'd you say?
Is swinging similar or the same thing as rolling?
Uh, I'm not sure what rolling is, but swinging is basically when you hold a trade longer than a day.
Oh, okay, okay, okay.
Yeah, yeah. So when I say swinging, I just mean I planned on holding it for multiple days.
Okay.
And so since it expired, the next day, I didn't even have that opportunity to hold it for multiple days to see if that downside move was going to happen. But
Okay.
if I would have traded contracts that expired a little bit further out, I would have lost less money. Um, but I was willing to take the risk on this because my account is small and I don't really care if I take those huge losses because I can recoup that pretty easily.
Okay.
The next trade that I was looking at was IWM. So this is a similar instance where we see. So this was you're gonna see this green candle on a bigger time frame. Yep. So I was looking at this. So you see this sharp sell off to break this low. So we see this green candle right here and this green candle right here. By that sharp sell off, I mean this big gap down. So we
Mm-hmm.
see that huge gap down. And so that's making me interested in this green candle because I'm thinking there's going to be a reaction. And we see that right here with this red candle. So I was looking for it to return to this zone and I was looking for puts. So as soon as it got to this zone, I seen this first candle form. A very good tip is that sometimes you don't really always want to be the first person to enter when it enters a zone because it's more likely, where we always talk about where somebody's going to get taken out. And
Mm-hmm.
if you look on a smaller candle, or a smaller time frame, you see this candle right here would have been so price traded in here, it went up and up and up, and then it wicked down. That's what happened. And then you see this next candle the next day, it gaps above this and it takes out those highs, and then we start seeing that sell off. And so you always want to wait, for it to take that other person out, the people that entered immediately, and then you want to take that to the downside. Um, and then so right here, after I seen this huge candle, all I was waiting for a price to come back up because puts are cheaper the higher price is. So I waited for this green candle to form, entered about here, and then I just took that move to the downside. And this was like 100% return. I only put like $30 into this trade though, just because I had took that huge loss and I wanted to size it down. And
Yeah.
so I wasn't trying to like revenge trade essentially.
Mhm.
Um,
Gotta recoup.
what'd you say?
I said you gotta recoup.
Yes, sir. Yes, sir. That's all I'm doing, just building that base. So NVIDIA is where I started kind of, picking up the pace.
Hmm.
Um, so another thing that I want to direct your attention to is that in an uptrend, you'll see these moments where price squeezes and then goes up, and then it squeezes and then it goes up. So that just goes to show,
Oh.
yeah, that's that example of like price has to accumulate first. And then my tools are all messed up now that I did this. But let me see if I can find the right tool. Tab. There we go. All right. So that just goes to show, price needs to squeeze sometimes, a lot of the time before it goes up, and then it'll squeeze again, and then it'll go up, and then it'll squeeze again, and then it'll go up. So that's where we see right here. We see that upside move, squeeze, upside move, squeeze. And so all I'm doing is when price starts to squeeze, that's when I'm looking for those opportunities. And most of the time, those opportunities are going to come right at 8:30 a.m. You see like price closes after that squeeze and then gaps up right here. And then you see it taps all the way down into this high and then continues. And this trade is at 8:30 a.m. So this is 1 hour. And that's perfect for small account people because you want to get in on that whole candle and you can grow your account significantly. And then, or you can also, buy at the end of the day after that squeeze, and then you see price gaps up and then goes up a little bit. I wouldn't be mad at you for doing that. Um, but essentially, what I did was I just saw that price kept going higher and higher, and then I saw price started squeezing, and I want to move this stupid bar somewhere else. That's fine. All right. So you see price is squeezing, squeezing, it taps into here, and it starts kind of moving sideways.
Hmm.
What I was interested in was, all right, it's that same concept of where we see that green candle, and all these trades were taken at 8:30 a.m. So that's another thing to keep in mind. But I see this green candle right here that broke this high right here. So I was like, all right, I'm gonna drop down on smaller time frames. And you can see that a lot more clearly where we see these green candles. And this looks very similar to that other trade that I took. We see it break this high, and all I'm doing is expecting price to tap down into here, have a quick move, and you see that quick move right snaps all the way up, and then it kind of trades all the way up here. And then I had sold off. I kind of got lucky on this one. I had sold, or actually, this one is the one that kept going up. But so maybe I should have held my runners and left them to keep going. But this trade still paid me like $119. And it kind of shows you how fast this happens in the morning. You
Yeah.
see right here, this red, this is a 1 minute chart. So 1 minute it comes down, the next minute it snaps up, snaps up, snaps up, and then we see that consolidation. So it's the same principles. And those principles apply on small and big time frames, right? You'll always see that squeeze, and then you'll see price go up. And then you'll see that squeeze, and then you'll see price go up. So that's
Hmm.
another way you can gauge a strategy is just by saying, all right, every time I see that squeeze, um, and I think prices going up. That's another key thing. You want to identify that price is in an uptrend, but you can easily make money off of a stock that way. So that was the trade on NVIDIA. This is my biggest trade this week. The next trade, Apple. I'm not going to break down, or actually, no, I am going to break this one down because I think it's important to just see. And notice that most of these setups that are paying me the most money, I'm most successful with, are the ones where I'm betting the market is going up. And that's because
Hmm.
that low just got swept and everybody's like, buy low, buy low, buy low. But I'm just going to keep doing this, right? The whole week, I wasn't like, all right, I'm just going to keep betting against the market. As soon as I took that big loss of the puts, I immediately switched it and was like, okay, market's going up. It's going to continue to go higher. Um, so another key thing that you can look for is that, so you see how both of these candles have wicks that are relatively equal.
Yeah.
Um, right? We see price come down, it taps right here and it comes down and it taps that same price area. So what you want to look for, another ideal setup is you want to see price trade below this and then have that snap up. And that's an easy trade that you can take. But what I had made the mistake was I had entered too early right off of this zone. So you see price has that reaction and I was like, oh yeah, it's going to keep going up. and then you see it trades down just below where that is, where those equal lows are, and then it starts to go higher and higher. When I actually should have made my trade kind of something like this, and I could have held, because this was a little bit below it. I could
Mhm.
have held that, but I wasn't. I was at work, and I was like, if it's gonna go below, I'm just gonna get out anyways.
Yeah.
But on a smaller time frame, just kind of showing you what that looks like. It's that same idea, right? We see these nice green candles, that nice break. We see this zone created off of that, right off of that break. But we see these equal lows right here. We see this wick and this wick. Price trades just a little bit below those wicks, and then it starts to have its upside move. So that's another key thing that you can look for if you're looking for a calls entry. Trade six, IWM. So this trade was another call setup. Uh, what happened in this trade? Let me make this go for a little bit. So price had traded all the way down here, and you see this huge green candle that formed. So
Hmm.
as soon as this green candle forms right here, all right, all of these green candles, I looked at the fact that it took out this high right here, right?
Yeah.
Strong candles to break this high, because all I'm looking for is price to just have strong candles to break those highs. So it broke this one. Um, and then yeah, I had dropped down. Whoops, I had dropped down to a smaller time frame, and I was looking to catch an entry off of this red candle because I always look for the red candle before some strong green candles. That's kind
Hmm.
of an easy entry that you can take. And then we see price comes and trades down, and then we see that price goes eventually all the way up here. And this is another trade that would pay you pretty generously because you see it's a $1.45 move in about 14 minutes. So when you
Hmm.
have those dollar moves in 15 to 30 minutes, those are usually good times for small accounts because you can make 50 to 80%, even higher on a trade pretty effortlessly and pretty easily. So as soon
Yeah.
as price got in that zone, that's when I entered, and then I just played that to the upside. And this was I'm gonna break down these a little bit later too. And then the final trade that I took was some puts on SPY. So this is that same concept of when somebody else, I like to call it when somebody else gets taken out. So we see I was looking at this high right here, from this candle on the daily chart, and I was thinking as soon as price went above that, it was going to trade lower. And you see that wick right there actually is representative of that trade lower. So if I drop down to a 15, um, this is kind of what it would have looked like in real time. Prices going up, up. As soon as it sweeps that, right, sweeps that right there, that's when I'm looking to take puts. And then you can see it played around a lot. It gave me a little bit of trouble with these two candles, but it still came down. Ultimately, I was gonna, if it got above this high right here, I was gonna sell. Um, but you just see this was, it came up and then it had a nice move to the downside. And this paid me like, I think I made like $50 on this trade. And so yeah, that was the 7 trades that I took this week. There were some losers and some winners. But that's roughly how the process goes. Now you'll notice a lot of these are from IWM, QQQ, and SPY. And like I
Hmm.
said, that's because those contracts, if I look right here, they have contracts listed at a day, 2 days, 3 days, 4 days, 5 days. So they have
Yeah.
contracts that expire every day. So you can always, at the bare minimum, trade contracts that expire 2 days out. And
Hmm.
if you put $100 or something into that trade, and you're catching these quick moves where it's just like $1 to $2 move in a very short amount of time, you can easily double that 100, or at least get a 50% return. And even 30 to $50 on $100 is doable, because then after 3 or 4 trades, you already building up you're already building up your capital a good amount. So there's 3 different entries that I like to enter off of. Let me put up the presentation. So there's the break and retest of a high, there's the fair value gap, there's a demand zone, and then there's a sweep of low. I took all of these entries this week. Um, and I can kind of, if you want to see them, I can show you what they look like when I took them. But this was kind of the first one where if you see, so we see price trades up, price comes down. That this move right here would have been that strong move that we always look for. And then
Yeah.
when price trades down just a little bit at this high, this is called a break and retest. And that's usually when you'll see that move to the upside. And that's very similar to the trade that we took on IWM. You see right here, and then I'll minimize this and do a side by side just so it's clear. You see right here, chop down to 1 minute, right? You see price breaks this high right here,
Yep.
and I'm gonna draw this arrow right here just to show you. And that's where, that's where price would have retested this high, and that's usually where I look for a calls entry.
Okay.
Another key entry is the fair value gap entry. So what a fair value gap is basically just a gap between candles. And I took this on the Nvidia trade. Um, so as you can see, if I go back to that 15, um, so when I drop down to a 5 minute, you see how I have this gray box strong. So
Hmm.
this gray box is not. You're like, why is it not at a red candle? Well, that's because if you look, so what the hell? Okay, I don't know why it's tripping. Yeah, I don't know why the heck. Hold up. It's making my scale act all weird.
No problem.
Okay, there we go. So you see, I think I talked about this a little bit of where I always look at candles and three candle increments. So if you look at, for example, this is candle number one, this, and then this would be candle number two, and then this would be candle number three. I'm gonna just show you how I draw that zone. So I look at candle number one, right? And I always want to, the easiest way to see this is if you look for strong green candles, you'll see from the top of this candle and the bottom of the third candle, you'll see that those wicks don't connect, right? We see usually what you would want to see if price is moving efficiently, you would want to see something like that, right? You would want to see that wick extend all the way down because this green candle is just telling you there's a surplus of orders being placed. And when
Hmm.
that happens in the future, people are going to be looking to enter at a cheaper price where that surplus of orders was placed at. You know what I mean? And
Hmm.
so we see that wick come down here, and that wick actually fills that area where this wick should have been, right? Because you see on all these candles, you don't really see those gaps in those candles. You see smaller ones like this from the top of there to the top of there. And it just goes to show you that that gap eventually will get filled. That kind of
Right.
makes it. And another example, this one's kind of a smaller one. You'll see from the top of this candle to the bottom of that candle, that gray area gets filled. And it's that same idea of where when the market gaps and it makes a gap overnight, and it's like a blank space in the chart.
Yeah.
The same way that those gaps get filled, that's exactly how these gaps get filled. It's
Oh,
like kind of the same principle. Because the reason that the market gaps up or down is trying to find a better price where people want to enter the market. And so if it gaps up, you know what I mean? It's just because people think, that's where the profit is. People are pushing it higher and higher and higher. And then sales are going to come just because price has moved too high. So that's kind of
so
that entry where you're entering in that gap. Yeah, go ahead. You said something?
so in real time, do you have like an indicator set up to identify that, or are you
Not so
recognizing that in real time?
yeah, in real time, this is exactly what it looks like. I'll come to my chart, right? Hold up. So in real time, this box won't even be here. All right, let me go back one candle. Go back to right. here. So in real time, this is exactly how I would look at it. As price is forming, I would say, okay, there's that strong green candle right there. And there's multiple gaps, right? There's from the top of this candle to the bottom of that one, there's that gap right there. So I'll mark all these out on my chart before the market even opens. Or I'll look at the top of this candle right here and the bottom of that candle right there. And that's because there's no wick or there's no price that comes and fills to retest the high of this candle, right? There's no price that came down here and did that. So I want to see price in the future come and fill this zone a little bit. So now you see that's when price comes down and forms that wick, just because that's how price moves efficiently. You don't want to see those gaps in those candles. And as soon as I see price trade into this gap like this and set my stop loss at that low, that's kind of how I'll take that trade as it develops, if that makes
Okay.
sense.
Yeah.
So that's like the second entry. That's the fair value gap entry. Another one is the demand zone entry. I didn't take this entry, but I tried to take it on Apple. Um, so in real time, as this candle is forming, this is what I was thinking. So let me delete all this. So these candles are forming, and then I'm gonna wait. So I've seen this high. So all I did was I dropped down on a smaller time frame, and you're not gonna be able to see that circle, but that circle would have been right here, right? You see these candles push past that, and I drew a box at this red candle. So that would kind of be your demand zone where you're looking for price to trade into here and then snap up. But this is where we see price trade a little bit below that zone and then move up. So you would have taken a trade that was something, you could do something like this where your stop loss is just a little bit below it. And then as soon as price comes all the way down, to that price action, it may take a while, but all you're doing is just waiting for price to get down there. That's when you kind of take that trade. You will buy a couple calls, and then you would just wait for price to move to the upside. And this is going to take a lot of candles, but
It eventually get back up though.
yeah, eventually it gets back up. And like I said, I could have held on this one. But the higher price is, the more risky it is to buy because
Mhm.
we see this whole upside move that's been happening for weeks and weeks and weeks, right? Or not weeks, but for days. So the higher that price gets, the more risky it is because you could see a sell off because people want to take profit the higher and higher that price goes.
Mhm.
Um, so I'm not looking to take, crazy returns on this. Like I'm not looking to go all the way up here. I think it'll come all the way up here and take out this high eventually. But given the context, this would have been on a Thursday. It's later in the week. You're not really gonna see you're not really gonna see a trade like that. You can, it's possible, but it's not probable. So that would
Mhm.
have been a demand zone entry, but the most reliable is the sweep of the low entry. So an example of this is where, you see price trade a little bit below this one right here, and then price move to the upside. And the reason that I say this is the most reliable is because all of the other entries that you're going to take, those lows are going to get swept most likely. So like for example, with this trade, you'll even see that, whoops, what's going on with that? You'll even see that eventually, that entry that I took right here, you see price comes and sweeps that in the future. And so you could be anticipating this low to get swept, and then you could be anticipating a move to the upside from there. And that's just simply because we see, all of these strong green candles right here. And I bet you if I zoom out on some type of time frame, you'll see those gaps that we talk about. You'll see those other zones, and we're just looking to take an entry off of the best area that's essentially the lowest. And so the lowest point would be below this low where people bought before, wicks them out, and then it continues to go higher and higher.
Mhm.
So So those are like four ways that I typically enter the market when I try to buy calls. And each of these times, these are usually the type of trades where I'm not afraid to buy those contracts that are 1 day out or 2 days out, specifically for these trades, because I understand that that's most likely where those quicker moves are going to come from, those quick $1 to $2 moves. And then, kind of like I said, illustrating in the in a bigger time frame, you see these patterns as well. We see this low get swept, right? And it's just barely below that low. So if you did want to catch a swing, you could enter down here, something like this, and then you could hold and hold and hold really until you deem necessary. But that's another good way on bigger and smaller time frames. This model basically works if you're looking for like a sharp move to the top side. And it's not
Okay.
guaranteed that it'll keep going higher and higher and higher, but this is just if you're looking for that quick initial snap, and that'll really help you build your account a lot more.
Mhm.
So that's essentially kind of it. Do you have any questions based off of that?
Um, no, a lot of it is making sense, and I think with this breakdown and stuff, I'm starting to understand a lot more how you use the different time frames to influence certain decisions you're gonna make based on the information that is gonna get back to you in that
Exactly.
specific frame.
Yeah. Yeah.
So that
It's
really
all
do.
about, yeah, go ahead, go ahead.
No, and I was just saying, like, if you're going to like day trade, it makes sense that you need that minute by minute information. You
Mhm.
know what I'm saying? And because it's gonna tell a different story if you're looking at like the weekly behavior of it, and
Exactly.
it makes much more sense why like your goals or your strategy matters when
Yeah,
looking at it. Right?
exactly.
Because I ain't
Exactly.
really
Because
understand like where am I supposed to be looking, like what scale, but now this makes a lot more sense.
yeah, yeah. And to even gauge a scale, here's a good trick. So, obviously you want to understand where you are on the daily chart because you want to understand overall where the trend is going throughout that week. So if you see these green candles keep forming, well, you're just going to be thinking, all right, I'm going to be looking to buy low when price comes down and anticipate an upside movement. And typically what you'll see with the best day trades, like for example, with this one, you'll see three very quick um you'll see three big green candles that are that's kind of the like sweet spot.
Yeah.
Um, you see right this one right here, this one right there, and then this one right there, right? That's because it's 8:30 in the morning. Oops, it's not gonna let me drag that one. It's 8:30 in the morning, and that's usually when you'll see these big three candles form. Another
Mm,
time right here, right? You see this is 8:30 in the morning. You see the biggest moves form in these three candles. Look how much price went up. Price went up
yeah.
$3.76 by 9 o'clock. Same with this one, price went up $3.19 by 10:30. And
Mhm.
so I'm just looking for those moments where price will make those stronger candles. You even see right here, this move right here, this upside move came right at 8:30 in the morning. This is at 8:45 when I entered, and you see how
Mm,
big this green candle is compared to all of these green candles.
yeah.
And that's why I'm looking to enter right at 8 a.m. And I'm just looking for that's why if I don't see an entry between 8:30 a.m. and 9 a.m., I just walk away because it's more likely that these green candles or any big candles are going to form in general. And so
Mm,
that's when I'll kind of just decide to walk away and not really take a trade like that. And then the same thing happens with this. Once again, this is right at 8:30, 8:45 in the morning. And it's even the same on the other side, right? If you understand that these lows are about to get taken out and it's 8:30 in the morning and you want to take puts, I wouldn't even be mad at you at that, simply because we have these smaller green candles on a smaller time frame that are going to act as areas where people are looking to sell off. And so
mhm.
understanding that, we have this strong break right here, we see price kind of consolidate a little bit, and then price trades below this. you can take easy, quick scalps on your puts, or you can just wait for price to sweep that low and then take easy, quick scalps on your calls. And that's a nice way to gauge it. But I recommend that wherever the price is going, wherever the stock market is going, that's the only direction you should be taking your trades in. You shouldn't be trying to bounce back and forth and then trying to take the calls and the puts and the calls and the puts because you're
Mm-hmm.
missing opportunities when your account gets bigger to catch moves like this where you just let your runners run and run and run and run. If you do get to the point where you can buy runners that are expiring like a week or two out, that's where
Mm-hmm.
that'll come in handy to where you can literally just enter right here and then hold a trade like that for days if you want to.
Okay.
So yeah, it really all just depends on what your goal is. And another stock because you also like long term, something that I've been eyeballing for a few months. I may have talked about this in the future, but Roblox, because it's that same thing that I always talk about where if you see price accumulating, you better be expecting price to move once it does start to break this accumulation. And
Yeah,
all of these highs right here, yeah, go ahead.
no, I was gonna say it's funny because I just got rid of Roblox like off my list. Like I was watching it for a while, and
Yeah.
it was like, man,
And the thing is with this, I think, this will take like a miracle. This will take like earnings or like some type of news before you start seeing a move that does start going up. Because
hmm
this is where it gets to depend on the company where you get into these bigger time frames. And that's where instead of, you know, hawking the chart for weeks on end, you just look at the news, check up on it, see what it's doing profit wise. And if you
hmm
think it's going to be going. And then you use these models where you learn how to enter where the most ideal area is to enter. You buy that and then you just hold it for however long you want to.
hmm
So yeah. Um that's kind of a general breakdown of the trades that I took this week.
Okay.
Do you have any other questions or anything specific as to how this or just any questions from your end on how you can use any of this information?
Um, so pretty much like you will have Trading View up and you doing all your trades on Robinhood, right?
Yep, yep. So in the morning it's exactly like this. I'll have Robinhood pulled up. So it'll be about 8 a.m. Um, it'll be about 8 a.m. I'll have my Robinhood pulled up on my phone. I have TradingView pulled up, and then I'll open all of these stocks and I'll look at which one has the highest probability of giving me this kind of setup.
And you looking at the behavior before market open.
Yep, yep. Because so you don't want to look at it the night before because do you usually see in the morning where you have that pre-market
Yeah.
you have that pre-market movement, that's going to determine heavily where you enter the market as well and what stock you trade. Because sometimes it'll price will gap up or down past your entry point, and it's not going to allow you to get an entry. Or sometimes it'll be like, let's say if price gap all the way up here, it's not likely that it's going to trade all the way down here and then go all the way back up for me to get to a trade. So in the morning, you know what I'm saying? If price because what happened was price gapped up here. It gapped up on this candle. Price opened right here, and then it traded all the way. It went up a little bit, and then it traded all the way down, and then it started to go up. And that's
Yeah.
because in the pre-market, I saw that in the pre-market, it would look something like this. Let me see if I can add a horizontal line. But anyways, in the pre-market, where it says 119.41, that's where, or it would have opened right here. So then there would have been a blank area in the chart. And like I said, those blank areas, they usually get filled. Um, go back here, it'll be all this stuff, right? So if price gaps all the way up here, there's a big gap right here that needs to be filled. And that's why I'm looking to take my entries down here because I understand that price is going to move quickly in the morning and the stock market is going to push a price to where it's going to find the best price to facilitate the move. And so it'll come lower because people are interested in buying lower. And once they do buy lower, it'll go higher and higher. And then that'll kind of
hmm
give me my opportunity to buy into the market.
Okay.
But yeah, it's just about layering all these things together and kind of just combining them all, and eventually you'll have like a cookie cut of like what to do at what specific time.
And that's the general gist of like how I was looking at it when I traded Sirius XM the first couple times. Because when
Okay.
I bought the first call, I remember you saying look at the volume and look for um just like the large green candles and stuff like that. And it was at that time it was trading a lot of volume for some reason. And I was
Hmm.
like, all right, cool. It's probably about to, and I seen the green candles, so I bought it and it actually did go up and I doubled my profit in that first one. And then the,
Okay.
the second one, I seen the same behavior and then it shot up. I would have made like, 50% on that trade. But I'm like, I decided to hold it that second time, and then it just went down and it hasn't recovered to that same point. And now the volume is like way lower.
Okay,
So it's
so
just,
it's you're probably still in position around here.
yeah,
But
yeah.
if you look at it, and that just goes to show that, these things apply on big and small time frames, because
Mhm.
look right here, excuse me. But if you look right here, we see this nice green candle, and this is on a weekly chart, right? And so it goes to that same thing of where, all right, from the top of that candle to the bottom of that one, you see that gap get filled, right? And then
Mhm.
once that gap gets filled, you see it taps just into this red candle. And on smaller time frames, all we're doing is saying, as soon as it taps into there, that's how I'm going to enter. And then you maybe target somewhere up here to make a next high. And I guarantee you that maybe this will play a little bit inside of this, and then you'll start seeing a strong move like that.
Yeah.
And that's just off of this order block right here. And then let's layer it down even more. If you drop down to a smaller time frame, you will see those other gaps form. Um, you'll see those other gaps kind of forming inside of the market where, we have from the top of this candle to the bottom of that one, there'll be a gap right there. See price fills that, right? And then it comes lower, and you can look for your entry pretty much anywhere from the top of this high. And this is usually sometimes what I do in the morning too. I'll say at the bare minimum, I want to see price trade below this before I start looking at any type of entry. And
Mhm.
then price will come down and you see price taps below this green area. So now I'm like, all right, I'm interested in calls. But you got to be careful once again, because just being aware. Oh shit, stop sharing my screen. But you got to be careful, because when you see price tapping into this area like it is right now, it's tapping multiple times. You have an area that could potentially get swept for somebody else to get a better entry for the top side. And you can,
Mhm.
set your stop loss below that low maybe and target somewhere up here. But and you'll see this more clearly if you drop down to a hourly candle, whoops, or to an hourly chart. You see price comes down, it bounces once, comes down, it bounces twice. Whenever you see price bounce 2 or 3 times, it's more likely that in the future it'll trade just below it, and then it'll start to continue higher to make its move. And
Mhm.
I and I bet you could either see that, or you could just either see it keep going like that.
Mhm.
But either way, I don't think your calls are cooked. I think your calls are fine. When is your expiration?
It's like September 20th.
September 20th. So that'll be about around here. Um, I mean, that's how many candles? One, two, three, four, about 5 or 6. So yeah, 100% bet you'll see you could see some type of trade below this, and then
Mhm.
some type of continuation. And as soon as you see price dip below that a little bit, don't be scared to load up some more and buy some more, so that when it does start to go higher and higher, you will have entered at a better, cheaper price on some more contracts. And then
Okay.
if you had a lot of money and a lot of time, then you can hold as it goes further and further out.
Mhm.
But yeah, so that's just kind of a brief, use this on multiple time frames because it works. It works charms. If you just learn how this model works, I
Yeah.
guarantee you can make it some decent money on calls. But yeah, you got
Oh,
any
this was
other?
real informative. This was real
Yeah.
informative.
Okay, bet. And once you start, oh, another thing, if this week you still don't feel comfortable, as soon as you hop on Robinhood, let's say you're thinking to trade SPY. Let's say you do see price get into one of those zones, and this is just showing you how to add it to your watch list. You would click this plus, and then you can just add it to your watch list. The minute you add it to your watch list, it'll just simulate it as if you would have actually bought that at that time.
Mm,
Um, and on your phone, it'll be a little bit different, but all you got to do is click it, and then you scroll down a little bit and add it to watch list. And
yeah.
that's a good way to see how your trade would have been if you would have entered.
Okay.
But yeah,
Appreciate you.
yes, sir. And me and Alex will still be kind of dropping what we think is gonna happen during the week and showing
Okay.
y'all. Um, but yeah, that's pretty much it. If y'all have any questions, drop it in the chat. I ain't got nothing else.
I got you, bro. Appreciate it, man. It's definitely building my knowledge and confidence up in it for sure.
Yes, sir. Yes, sir. And I would say once you start taking the trades and you start seeing how those candles develop in real time, then you'll
Mm.
start actually being like, oh, okay. That's what it means when the price comes down and you know what I mean?
To say, I think you'd seeing it in real time is different versus seeing it in hindsight too.
Yeah. Yeah. No, it definitely is. It definitely is. That's why I recommend kind of just seeing where my head was at during the week and then try to think through the trade yourself when you actually start taking it and just
Yeah.
just be thinking where is the quick move most likely going to happen. And this specifically if you have small amounts of money that you're working
Yeah.
with. But cool. Um, I ain't got nothing else, bro. I'll catch you later.
All
Thank
right.
you. It's hearing me yap, and that's pretty much it.
Yes, sir. Thanks, bro. I appreciate you a lot.
Yes, sir. I'll catch you later. I'll catch you later, Martel.
All right. Peace.
All right, peace.